June 17, 2014. Current time is 10:28 GMT. I'm sorry. Jay Meisler here with the daily Forex trading outlook. Market right now is in a holding pattern. Question really you should be asking yourself is a euro-dollar bid in an offered market. By bid I mean trading above 135.50. Trend is still down, but momentum certainly has slowed as 135 is so far being defended by whether it's an invisible hand, an options protection, or whatever else. Market has been down there several times, and we haven't been able to break through it. I said market's biding its time ahead of the FOMC meeting tomorrow. You can see it's being dominated more by position adjustments. See how the crosses are pulling in different pulling the dollar in different directions. And it's hard to see big bets being made ahead of the FOMC. Logic suggests the dollar should find some support ahead of it based on expectations that there will be a slightly less dovish statement. On the other hand, you also have Iraq simmering in the background, chance of U.S. sending some troops in as support. We have to watch oil prices as that could affect all economies and inflation, at least headline inflation. So here we are. Let's take a look quickly at charts. We're all looking at the same thing here. Key level remains 134.75. Look down here. We've been down here for almost 2 weeks here since we made that low 135.03. 1, 2, 3, 4, 5, 6. It's the seventh day, at least in this section here, where we've been testing the 135 figure to 15 handle really, and so far have not gone through it. I've looked at some retracement levels for 136.70, 135.10. They come in at sorry, I'm writing with my mouse again. 135.90 is 50%. 1.3609 is 61.8%. The 10-day moving average is 135.87, and the 20-day 136.08. So that whole 135, say 86, now to 09. Sorry again for the writing of like a kindergartner here, but that would be the initial resistance level, and we got to 135.87. As I said, 135.50 will set its tone. It's finding some support, so it's kind of trapped right now between 135, let's say 50 to 90. And that's really what it comes down to now. When we got U.S. CPI coming out today, it's supposed to moderate a little bit, so that shouldn't be a factor. If you look at the 4-hour, the 100-period moving average is 135.97, which is within that resistance zone. The 200 is 135.678, so that's out of court right now. In the 1 hour, you can see at 1 hour we've come off this low once again. Sorry. Right here. And we're trapped right now currently between the 100-hour and 200-hour period moving averages. So really, unless we take out 136.87, shouldn't be any more stops on the upside. There is some risk that we could squeeze higher, and I'd like to see it squeeze higher to give some more room to trade. But if not, then 135.50 becomes pivotal, where it has to hold to maintain at least the risk of a retracement. Below 135.50 puts 135 in play again. Above 136.08, then we have to seriously consider more of a retracement. And that's where we are right now, waiting for the FOMC, waiting for news from Iraq. And the market seems to be adjusting positions more than making, fresh, at least, buys into the euro. One thing that you can watch here, I post a lot of articles. This one's really kind of interesting. Posted it yesterday. It's how options affect the spot market. It's a real-time example. I think it's really worth watching because it's something a lot of people don't pay attention to. They hear about options, but they don't really get a feel but why they affect it. I think this is a good one. You should click on it. Take a look. Good trading. We'll see you tomorrow.